Welcome back to the channel. My name is Blake, and today we're going to talk about the infinite banking concept and why it may be the biggest financial scam ever, or so many people think. So the first thing I want to talk about is, what is a scam? Well, a scam is something that typically is associated with some kind of financial misleading of some kind from a financial professional that someone has been taken advantage of, okay? And I think this idea comes a lot when we're talking about the IBC, which is the infinite banking concept. I think that idea of it being a scam is coming from many people that probably haven't fully read Nelson's book, and I'm for certain that most of them have not watched his seminar, which many people don't know is available. So that's an important talking point right there. The infinite banking concept, and thus the process of becoming your own banker, that was taught by R. Nelson Nash in a 2-day seminar in which he traveled the country. Over a Friday and a Saturday, he had a group of people that he would sit for 10 hours between Friday night and all day Saturday and discuss this concept and the process of becoming your own banker. And he wrote the book as he was traveling the country for many years as a way to help supplement the teaching of his seminar, to help people better understand what he was trying to teach. So right there, I think a distinction needs to be made that unfortunately, I don't think you're going to understand all you need to understand by just reading his book, because that's not the way he intended, as he says on page 3 in the introduction to his book. Okay, so that's the first thing. If you have read his book, that's great. You have done more than a lot of people have done, because I know we're all busy and sometimes reading is not as easy as we want it to be, and there is an audio version available. But I would encourage you also to go find his seminar that is on either DVD or there's a digital version now as well. Both of those can be found through the Nelson Nash Institute, which is infinitebanking.org, or you can reach out to myself via my website and I'll make sure you get a copy of that as well. So please go back and watch his DVD or the digital version of his seminar to really understand what he was trying to teach. So where does the idea of a scam come in, okay? Well, I think another distinction needs to be made. We're ultimately talking about saving and not investing. So investing, to me, is the introduction of some kind of risk, whereas the ability to save is just working for something, whether it's a job or you provide a service of some kind, or you own a business and you get revenue and thus you get income that way. So you should be able to just save what you've earned from those ways that we earn the capital. But we've been taught that we can't just save the money because of inflation and the need to grow your capital for XYZ, right? There's all kinds of schools of thought out there, but the main one is inflation. And if you really knew what inflation was, you would understand why we actually can't save. Inflation is not the cost of the goods and the services that we purchase and use every day going up. It's the money supply by which we use to pay for those goods and services increasing. And we have no control over that. So the things that we put in our pocket or the digits that we see on our screen, those are being increased in number and quantity, which thus decreases the value of the ones that we hold. So every time more money is created, more currency is created, which is done by the banks and the Federal Reserve and Congress, okay? That's truly how the money supply increases and what is true inflation. And you may have heard of that, but you really need to understand that, because the very same people that want you to use the banks and the banking system are the ones that are teaching you through the mainstream financial system to, instead of save, invest, okay? And there's a lot of benefit that they get from you investing in these different asset classes. So the idea of being able to save versus invest, well, you really need to go back to the drawing board on that one, because you've been told that you can't save, but you really can. And then when you are able to save, you don't need to worry about all these risky asset classes that ultimately will erode away at your capital, because when you need it the most, you can't access it. And then when you can access it, there's taxes and penalties for doing it either the right way or the wrong way. You pick it. But really go learn about that. So the difference between saving and investing, we really need to understand that, okay? So again, let's go back to the financial scam. Well, the scam is that many people believe that the whole life policy with a mutual company that pays you a dividend, that is a scam because there are many other assets that you could be putting your money in that will get you a greater rate of return or you'll earn more interest on it, okay? So the idea of a scam means that you're being taken advantage of or you've been misguided somehow. But the mutual companies that issue these policies have been around for over 120 years paying a dividend. Some of them have been around for 200 years plus. So this idea of a whole life insurance policy is nothing new. So if it really was a scam, how has it existed for all these years? And if it's existed just like the other assets, how are those not called scams? Or maybe you can find videos and articles calling all those different things scams, right? So you could talk about how a 401k is a scam because you don't know really how you can access your capital if you can, and what it takes to access it when you need it most. You could talk about how buying real estate could be a scam because the only way that you access your hard-earned capital that you have built up in equity in this property, the only way you can access it is either by taking out debt, which is more interest, and a payback schedule that you don't control. So you have a mandatory payment that the bank's gonna send you, and you don't control the interest rate or the payback schedule of that, do you? So you can access the equity that way, or you can sell the asset. Well, that defeats the purpose of having the asset in the first place, right? Because then when you sell it, you have to pay capital gains taxes on it. So you have a tax again. So couldn't that be considered a scam too? So this idea of a scam, I think that's thrown out a little too easily, and we really have to learn about these assets or products that we have judged and called a scam. So the industry has a narrative of, whole life insurance is a scam. You only need term insurance, and you can buy the term because it's much cheaper, and you can invest whatever you were going to pay the difference of with a whole life policy in all those different asset classes that we discussed. But again, those asset classes now introduce risk. So a term policy is not guaranteed but for that term, and you have no other benefits associated with it. And then when that term ends, it's going to be a lot more expensive for you to get the insurance that you had, that same death benefit, because you've gotten older and the underwriting is going to be different, okay? Because you're now closer to your death or your mortality, as the insurance company says. So if you wanted to protect against that loss of the risk of loss that your family was going to experience when you die with another term policy, it's incredibly more expensive now. So couldn't that be a scam too? Now, you compare that with a whole life policy. Yes, you pay for it and it's going to cost you more at the same age, but it's for your whole life. And it's a level payment for your whole life. And at some point you stop paying it, but it still continues to grow. So you really have to ask yourself, the narrative of whatever you were talking about being a scam, who does that benefit? And in this case, we're talking about the infinite banking concept. And who would that narrative being perpetuated by, who would that really benefit? Well, it has to benefit term policy insurance writers and the financial markets that want you to put the rest of your money into all these different assets that introduce more risk. Okay, so really think about that and really, again, weigh this concept on its own merits and not look at everything through the really narrow lens of being a scam because it doesn't produce the same supposed results as some other asset class that you have. Really think about that. Also, let's talk about how we chase rates of return or interest rates in all of our financial dealings. If you can find 5% on one asset and then a year later you can find 6%, you would probably sell that one asset for 5 and change it over into this asset for 6, right? It's a greater rate of return. That's a 15% increase. Who wouldn't do that, right? It's just from going from one asset class to another. But when you sell it, don't you have a tax on selling from the 5% to the 6%? But is that even really the biggest thing you need to be thinking about? if you're putting all your hard-earned capital into an asset class and you need access to it at some point, does the rate of return even matter? Does the interest rate that you're getting even matter at that point? And many of us are taking on a lot of debt in our lives that we can't control, but we have to have in the form of a house, an auto loan of some kind, or even personal lines of credit and credit cards because we can't afford, the cost of living. We're taking out this debt just to pay for the things of life. And then the financial world out there tells us to invest all the money we've earned and put it in an asset class to make a greater rate of return to then combat inflation. All the while ignoring all the money that we're paying every month and every year to banks and third-party lenders in the form of interest. Have you ever done that calculation? Have you ever looked at how much you pay in interest each month on your mortgage? Have you ever looked at the total of what that's going to be if you take that mortgage out? Have you ever looked at how much you're actually spending on your vehicle when you take out that loan for either 5, 6, 7, 8 years now, and how much interest you're going to pay, and done the difference of the math between that and what you're investing and trying to chase a higher rate of return over here to combat inflation? We forget about what life costs us and how expensive things are, and we have to spend that money on those things. So really look at what your debt costs you, what it costs you to just live, and not just putting money away for some day in the future that we call retirement, and ignoring the 20, 30, 40 years of our living our lives and paying debt to the banks and the third-party lenders. That's something that R. Nelson Nash was trying to teach us in his seminar and in his book, which is a supplement to the seminar. So really think about that. And then people think that their investments are safe because of cultural conditioning and some kind of herd mentality. So the cultural conditioning is, well, this is safe because the S&P 500 over 30 or 40 years on average pays you 7 or 8%, and you can depend on that. But what happens in that 1 year or 2 year or 3 year stretch that it's gone down and hasn't gone back up to what it was when you first started, and you had to access the funds because you had a repair on your home, had an auto repair of some kind, had a medical bill that you needed to pay, or it was during your planned retirement. What do you do then? So is that safe? It's not guaranteed, right? That's a risk of loss, and you really need to factor that in. Herd mentality is just when you type in something on YouTube or on the internet and you read all these articles that are pretty much all saying the same thing. Are you able to swim upstream? Are you able to do something that other people aren't doing to achieve a result that other people aren't achieving? Many people out there believe that they're going to achieve this result of financial freedom and passive income whenever that time comes, and then they look up 20 or 30 years later, and now they're having to work an additional 5 or 10 years because that plan didn't really pan out. We have hard, real examples of that today, of many people that sadly, unfortunately, are still having to work at 65, 70, 75 on up. And there's a slim opportunity for them out there to work because there's now a job shortage, so they say. Many people that are just coming out of college trying to start their careers are looking for work. How's that gonna look if you're ready to retire and now you gotta keep working and there's no employment opportunities for you? And the thing that you put all your money into not only didn't pan out, but if you access it, you're gonna be penalized because it's in a down market. Have you ever thought about these things? So don't just go to, when you sign up for your new jobs, human resources packet that they give you to get the 401k and the match and all that. And I'm not giving financial advice here, but don't just do it because everybody else does it. Really read through the things, and maybe you need to take, a few weeks, a month, maybe a whole year until the next enrollment period to truly understand what you're getting yourself into and really know what the investment that you're making is, because it is just that, it is an investment. So I could call, you could call, we could call anything out there a scam. And anytime that there's something that's going against the grain or going against the stream of what everybody else is doing, it likely is going to be called a scam, because there are a lot of forces at work out there that are benefiting from us putting our hard-earned capital into these different assets that are really investments that then introduce risk. and they make money from that. And it's okay for them to make money, but do you really understand what you're getting into? You could call anything out there a scam. I think that's the easy way out, and I think we should all take more time and really understand what we're getting into and just save the money. Just leave it in the bank account until you decide what's best for it. And if that takes a year or two, so be it. It's better than getting into an asset class and choosing something to store all your wealth that you really don't understand, because at the end of the day, whatever happens with that, it's ultimately going to affect your life. It's not going to affect the company that is the administrator of your 401k or your pension or whatever it is. It's not going to affect the fidelities out there and the different brokerage houses that house your different accounts and your brokerage accounts and your investments. It's not going to affect the bank that you were given a loan for your real estate. It's going to affect you, because all of them have put all the risk on you. None of the risk of any of those products is on any of those companies but you. The risk of loss is on you, not the company. So really understand what you're getting into. Understand where you're going to put your money, and if you don't understand it, just don't do it. Be patient, take more time, take more due diligence, because you've already worked really hard for it. Work a little bit harder, take a little bit more time, and maybe you want to read Nelson's book and watch his seminar at the same time. Give it 10 or 12 hours of your time over however long it takes you to do it, and learn something different. Learn something that would be considered upstream compared to everybody else's herd mentality and their cultural norms, and maybe weigh it on its own merits and see how good it can be for you in your life. When you understand that concept, when you understand the process that he called becoming your own banker, it's a beautiful thing. But even if you're along that journey and you don't understand it, that's okay, because it is going upstream. And that's why I'm here. Call me, reach out to me, go on my website, continue your learning on my website. There's different resources there for you to continue your learning. And ultimately, you can reach out and ask me questions if you want to. You can also put comments and questions below in this video and get involved in the community that we're building here, and allow people to ask questions and not be afraid and not be in the dark about whatever it is that they have questions about. There's no judgment, there should be no fear, right? This information was given to all of us almost as free as can be, in the form of a book or a DVD. The book costs you a little bit of money, the DVD costs you a little bit of money. But you can go out on YouTube now and find all of this information just about, and really get a good introduction to it without those things. But those are not a replacement. I highly encourage you to find his seminar, which is either available on DVD or digital, and get his book. And take time to really understand what he was trying to teach us. He left us a legacy to help us be free, to help us live a stress-free and peaceful way of life fully. But really, in our financial lives, that's where it's going to start, because most of the stress we deal with in this life is from our financial dealings. So I encourage you to give becoming your own banker a fair shot. Don't just look at what everybody else says about it. It's not a scam. It's no different from anything else that could be called a scam. But I encourage you to look at it and really do the research on your own. And then when you come to some things you don't understand, reach out to me. And again, put your questions and comments in the video below, and reach out to me either on my website or through this YouTube page. Again, I appreciate you for watching this video and stopping by, and I look forward to talking with you soon. I value your time, and I hope you get a bunch of value out of this video. Thanks.